This is Matthew Kratter's Bitcoin University. Today I want to talk about MicroStrategy, Strategy, STRK, and STRF, which are these preferred stocks that people have been talking about. This was a request from MMCP4MI, who left a comment saying, thanks, please do a STRK versus STRF comparison when you get a chance, and he was nice enough to leave a tip as well. So in order to talk about preferred stock, we have to understand something called capital structure. Capital structure is just how a company finances itself by raising money, by raising capital. And there are two main ways of doing that. There's equity and there's debt. Equity is when the company allows investors to own a piece of the company. For example, the common stock of a company. This is shares of ownership in the company that may also entitle the investor to dividends or voting rights. And then we have the debt side of the equation as well, which is when the company borrows money. Examples of this would be corporate bonds, which are long-term debt for a company, notes, which are short-term or medium-term debt for a company, and then commercial paper, which is really short-term debt that's issued by a company. Then you also have these weird hybrid securities that combine elements of equity and debt. For example, convertible bonds, which we've spoken about before on this channel in relation to MicroStrategy. Convertible bonds, they're actual bonds, but they may be converted to shares of stock if the stock appreciates enough, and then there'll be a lot of other qualifications that need to be met. You need to always read the prospectus to understand how these things work. Another example of a weird hybrid security, I think, would also be preferred stocks. They look a little bit like a stock, and they also look a little bit like a bond. They often pay a fixed dividend, and they are also higher up on the capital structure than common stock, hence the term preferred stock. Capital structure becomes even more important in the event of a bankruptcy or corporate liquidation. So here's who gets paid off first in the capital structure if the company files for bankruptcy or there's the liquidation because it's having a debt problem. Number one, who gets paid off first? The secured creditors, the holders of debt that's secured by equipment, buildings, etc. Next, you have the unsecured creditors with priority claims, which is Uncle Sam, the tax man, unpaid workers, unpaid wages, things like this. And then you have unsecured creditors, for example, holders of the company's bonds, bank lenders, etc. And then below that, just below that, you have the preferred stockholders. And then below that, you have the common stockholders. If there's no money left over at a liquidation, you're out of luck as a common stockholder, and the bondholders will end up owning the company after a restructuring. Now let's map this onto the company Strategy, which of course is a Bitcoin accumulation company that used to be called MicroStrategy. Let's map this capital structure onto Strategy. We probably have number one and number two. I haven't dug into that, but number three would be the unsecured creditors. This would include all the convertible bond holders, for example, the 0% convertible senior unsecured notes due 2030. We can see here they're notes because they're medium duration or medium maturity. They're convertible into stock at a certain strike price. They're senior because they're above other notes, and they're unsecured because they're not backed by factories or buildings or any assets like that, and then they mature in 2030. So that would be an example of an unsecured creditor without a priority claim. Then we have the preferred stocks of MicroStrategy, of Strategy, which are STRF, STRF, and STRK. STRK, those are the two we're going to be talking about today. And then just below that in the capital structure, we of course have the common stock, which people are most familiar with, MSTR. Now, in the event of a bankruptcy or restructuring, which to be really clear, I don't expect to happen to Strategy, to happen to MicroStrategy. In the event of a bankruptcy or some sort of restructuring where they defaulted on their debt, these convertible note holders would get paid back ahead of the holders of STRF and STRK, who themselves would get paid back ahead of the holders of MSTR. So if we want to look at their convertible bonds, here's an example of one that was offered February 24th, 2025, $2 billion worth. And if we scroll down, we can read all the attributes of it. The question people always ask here, of course, is Strategy leveraged to the gills? And are they at risk of blowing up with all that debt? If we take a look at their debt, Strategy provides a nice couple of tabs on their website. And under the debt tab, we can see that the notional value, which is the value that needs to be paid off, $8.2 billion worth of bonds. And the blended interest rate on these is just less than 0.5%. So not a huge amount of interest that needs to be paid on these. They will need to be paid off $8.2 billion worth of them when they mature, unless they're rolled. But if we take a look at how much Strategy has in assets, they currently have $50 billion worth of assets in Bitcoin, which could always be sold or borrowed against to pay off this debt. So 50 billion in assets here and just 8.2 billion in debt. So this is not a real concern. Debt is not a concern, or blowing up is not a concern for Strategy. People compare it to things that happened in the great financial crisis, and there's no comparison whatsoever because those banks like Lehman, for example, were levered 50 to 1, and Strategy is using very, very conservative leverage. If you're finding this video helpful so far, I just ask you to help to support this channel's educational mission. Hit the subscribe button. That does really help. Leave a like, leave a comment, question, suggestion for a future video, and share this video with a friend or family member. So let's talk about more about the preferred stocks, which is what you really want to hear about in this video. We have the first one, which is STRF, STRF. This is a preferred stock that pays $10 per share annually, and it can only pay this $10 in cash, in US dollars. The face value of this stock is $100, which with a $10 annual dividend would give you a 10% annual dividend yield, but your own dividend yield will depend on the price that you pay for it. This is more of a theoretical number that the preferred is calculated at on the prospectus, and this is how they attach the 10% dividend yield to. But your own yield will depend on the price that you pay for it. I should say also this $100, that may be the price at which you're made whole in a liquidation event as well. So your own yield, though, your own dividend yield for this preferred stock will depend on the price that you pay for it. So for example, yesterday it closed at 91.85, or a couple days ago closed at 91.85, and so the dividend, if the dividend's 10, if you buy it at 91.85, your yield would be 10.89%. rather than 10% because it's now trading under that face value of $100. And since it's a preferred stock, STRF holders, STRF holders will get made whole after bondholders, after those convertible bondholders have been made whole, but before holders of the common stock of MSTR in the event of a bankruptcy or restructuring, which is of course pretty unlikely to happen unless Bitcoin doesn't do what we expect it to do, as I said before. There's a nice tab here that allows you to monitor this. It has the latest STRF price. It has the notional amount that have been issued, amount of the stock that's been issued. It has the dividend, and this is calculated on $100 face value. You have the effective yield here, which is basically 10 divided by 91.85. And then you have the correlation with Bitcoin, etc. So very helpful tab. The real question here is, where will Strategy get the money to pay that $10 annual dividend for STRF? Number one, they can earn the money from company operations like selling business intelligence software, which is their traditional line of business, and they haven't been really doing that much cash flow from that recently. They could also enter more Bitcoin-related services at some point, but for this point, at this moment in time, these are really negligible cash flow sources for the company. Number two, how else would they get the money to pay that 10% annual dividend for STRF, or also pay the bondholders or pay the other preferred stockholders? Number two, they can issue and sell more shares of MSTR, the common stock. They could also issue and sell more shares of STRK, which we're going to talk about. They could issue and sell more shares of STRF, which would be a little weird to issue STRF shares to pay the dividend, but they could do that. Number five, they could issue and sell more convertible bonds or even plain vanilla bonds. At this point, someone's going to raise their hand and say, but isn't this a bit like your crazy friend with a huge credit card debt who keeps borrowing new money to pay off old loans, digging his debt hole deeper and deeper along the way? Not really. This isn't true for Strategy because the interest rates for both its convertible bonds and preferred stock are much, much lower than credit card interest rates. And also the similarity would be much greater if your crazy friend who's in debt also happened to own $50 billion worth of the most important digital asset in the world. So Strategy can obviously sell off bits of Bitcoin to pay the STRK and STRF dividends if it really needs to. At some point, it may also lend out its Bitcoin for yield and use that cash flow to pay STRK and STRF dividends. But isn't that risky to lend out your Bitcoin for yield? Remember what happened to BlockFi and Celsius, etc. What about not your keys, not your coins? These will be questions that will arise right now. Well, that's not really a new problem for Strategy since almost all of their Bitcoin is already being held by third-party custodians, as we can see from their annual report from their 10K custody of our Bitcoin. We hold substantially all of our Bitcoin in custody accounts at US-based institutional-grade custodians that have demonstrated records of regulatory compliance and information security. Now, none of this is to cast doubt or FUD on Strategy, but it's not clear to me that Strategy could do a better job of keeping its Bitcoin safe than Coinbase Custody or Fidelity or whomever else they're using as custodians. You can say a lot of bad things about Brian Armstrong, and you probably should, but one thing that's true is Coinbase Custody has a very, very good track record of not losing its Bitcoin. So let's say that Strategy began to demand a yield on that Bitcoin that it's holding at its custodians. If it could get a 5% yield on $50 billion worth of Bitcoin, that's $2.5 billion worth of interest income, which is more than enough to service its convertible bonds, its debt, and also these preferred stocks, STRF and STRK at some level. Where would this yield come from? Almost certainly through the custodian lending out the Bitcoin for yield, which of course comes with its own risks of rehypothecation and even possibly loss. Another thing to note about STRF, as it says here, declared regular dividends on the perpetual STRF preferred stock will be payable solely in cash. And in the event that any accumulated regular dividend on the perpetual stock is not paid, then additional regular dividends, compounded dividends, will accumulate on the amount of such unpaid regular dividend compounded quarterly. So what Strategy is doing here is it's giving itself the option to not pay dividends every once in a while if it's having cash flow problems, and then it can just compound the dividends owed and pay them at a later time when its cash flow is better. Now, another preferred stock from Strategy is STRK. We just talked about STRF. This one is STRK, STRK. This one pays an $8 per share annual dividend. And this one, unlike STRF, which I believe is only payable in cash in US dollars, this dividend is payable either in cash or in MSTR common stock. So they could basically print up their own money by issuing new MSTR shares to pay this dividend, which would result in a dilution for both MSTR holders and a bit of a dilution as well for STRK to the extent that it is convertible to MSTR common stock. So STRK has a face value of $100, 8% dividend yield on that face value, which means it pays that $8 per share either in cash or an MSTR stock. And again, just like STRF, your own yield will depend on the price you pay for it. So if, for example, you buy it at a recent price of $86.31 and it pays an $8 dividend, you're getting an effective yield of 9.27%. Now, since it's a preferred stock, STRK holders get made whole after bond holders, just like the STRF holders, but before holders of the common stock, the holders of MSTR. And I'm actually not sure. I'm sure there's some order of priority here. I'm not sure if STRK or STRF is ahead in the capital structure and would come first in a liquidation cascade or in terms of paying these groups in the capital structure back. But they're both preferred stocks. Definitely one of them is ahead of another one. You'd have to read the prospectuses to find out. And again, that's not a likely scenario. So again, here's the page for STRK on the Strategy website. We can see a dividend yield of 8 on $100 face value. So the effective yield today is 9.3%, and they've issued $774 million worth of STRK stock. This is a little bit different from STRF, as we said. Declared regular dividends on the perpetual STRK preferred stock will be payable in cash, shares of its Class A common stock, or a combination of cash and shares of its Class A common stock. So unlike STRF, this one they can pay you back with stock, as we said. And this one also comes with a sort of an embedded call option. So it looks a little bit like a convertible bond, even though it's a preferred stock. And it goes like this. Holders of the perpetual STRK preferred stock will have the right to convert their shares of perpetual STRK preferred stock on any business day into shares of MicroStrategy's Class A common stock at the then applicable conversion rate. The initial conversion rate is 0.1 shares of MSTR common stock per share of perpetual STRK preferred stock, which represents an initial conversion price of $1,000 per share of MSTR. This conversion rate and conversion price will be subject to adjustment. So again, it's very important to read the prospectus. This is just a press announcement. I think it's important to keep the big picture in mind here. So if you're Saylor and you expect Bitcoin to go up at least 27% every year for the next 20 years, this is what he has in one of his models, then it makes sense to issue equity and debt that has a cost of capital that's less than 27% per year. And STRK and STRF with these 8 or 10% dividend yields are much, much below the expected appreciation rate of Bitcoin at 27%. So that's a good thing. This is sort of a carry trade that he's doing. Again, Bitcoin will not go straight up, and whether Strategy runs into trouble depends on the path that Bitcoin takes from 93,000 to 13 million over the next 20 years. Strike and Strife both pay dividend yields that are far lower than this expected appreciation rate of 27%, as we said. Another really nice thing, unlike convertible bonds and plain vanilla bonds, which have a maturity date and thus need to be paid off or rolled, in which case you pay off old bonds by issuing new bonds, and you have to make sure that the bond market is awake and willing to accept this new issuance. So that's one issue when you're rolling. But unlike bonds, Strike and Strife do not have expiration or maturity dates. That's why they're called perpetual preferred stocks. And I think Saylor's having some fun here, calling them perpetual strike and perpetual strife. This is basically a perpetual strike on the dollar and perpetual strife with the bond market. Wink, wink. I'm going to suck all the capital out of the bond market and use it to buy Bitcoin. So the names are pretty funny. Both Strike and Strife can be retired by strategy if certain conditions are met. And again, you shouldn't buy Strike or Strife unless you've read the full prospectus and understand all the risks. And these things always have a lot of nuance. And I've only given you really the surface version of this here. Personally, I prefer to keep things simple and just buy Bitcoin, buy BTC, and keep it in cold storage. I'm not interested in returns like 10% or even 8% plus some sort of call option on MicroStrategy stock. But lots and lots of institutional investors certainly will be. I'm not the target audience for something like these preferred stocks, but there are lots of retirees, there are lots of institutional investors who will certainly be interested in these sort of yields. And so I think that strategy will continue to steal capital from the bond market with its debt and preferred stock products. And that's definitely a good thing for Bitcoin's fiat price appreciation. When you compare the yields on Strike and Strife at 8, 9, 10, 11%, you compare them to U.S. Treasuries, which have yields between 3.8 and 4.8%, which is far below the true rate of inflation. If you look at other corporate bonds, they're somewhere between 4.5% and 5.5%, and even junk bonds only pay you something like 8%. So when you compare these preferred stocks, which yield more than 8% and certainly have a lot less risk than high-yield junk bonds in the U.S., you can see why the bond market might be interested in Strike and Strife. And I believe that Saylor and Strategy are registered to sell something like 21 billion of each. So these can be at the market ATM offerings, as they call them. And once they've sold $21 billion worth of each, all they need to do is amend the filing with the SEC and they can sell more and more. And I believe I saw Saylor saying somewhere that he wants to sell he wants to borrow from the bond market or from the preferred stock market something like $3 trillion worth of capital and use that to buy Bitcoin. And so he does have a very competitive yield here. There's a lot of alpha here simply because Strike and Strife are much less risky than these other alternatives. If you want to take another look at the deep dive I did for MicroStrategy, now called Strategy, I'll put a link in the description notes to this playlist as well, where I talk about things like MSTY, selling covered calls on MSTR, as well as going into more depth about their capital structure and Saylor strategies here with Strategy. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.